Morning, afternoon, everyone. Tim Canham here from Sydney. Great to be able to present to you today on what's a very topical thematic in the markets. Just next slide, thanks. Just wanted to introduce us, put some faces to names. We currently run about $1 billion in small and micro caps. Wick and I are the portfolio managers. Justin, our young analyst, joined us a couple of years ago. Wick and I have been running these funds for about 11 or 12 years now. So we've certainly worn the scars over many years. I started with the products in 2002. Essentially, we run two products. One's a Future Leaders Fund, which is a mid-cap, small-cap type product, and the other one is a Developing Companies Fund, which is micro-cap, which we generally invest in companies with a market cap below 500 million when we make the investment. As Tim mentioned, first Sentier is quite new. We were formerly CFS GAM. The business was taken over by Mitsubishi Bank not that long ago, and so we're a independent and specialist investment management firm now, which is fantastic. Not part of the bank. Next slide, thanks. This is where you can find us on the website. You can certainly look at our products, and we do monthly updates, and like most other managers. So we'll just go on to the next slide. Just a quick one on philosophy, because I know we just want to get to the clean and green piece of the prezzo. What do we look for in companies? It's quite simple for us. We're very focused on capital and returns on capital and the balance sheet. That's key, especially in really small companies, because when things go wrong, they tend to unwind very quickly. So balance sheet is key. Also, a lot of these companies, as they'll attest the later presentations, it can be difficult to get bank funding and capital. So they're very reliant on the equity markets. So strong balance sheet, strong management teams. We like co-investment of management teams. We've typically invested in companies that have got a large shareholder, founder, family, for instance, and we like that sort of co-alignment of interest. But we also like earnings, and not just earnings growth. We like predictability and visibility in earnings. A lot of our smaller companies have been around for a long periods of time. Just because they're small, it doesn't mean they can't be very profitable. So that's one thing we do look at closely. Next slide, please. I won't go through all of this slide, but as I've said before, we're a co-investor, and the way I look at microcaps is we're basically one step above venture capital. So people often ask me what I do, and I say, look, the funds are for a specific purpose. They're here really to provide, obviously, returns for our investors, but we play a key role in the capital markets. And for companies to come to market and raise equity, we're a pretty good destination. And as I'll allude to in the next few slides, we're very patient. And these sort of projects, you need patient capital. You don't need fast-moving capital, and that's why our funds are sought after by many companies and investors. Next slide. Bit of promotion, but we've seen a lot of cycles. Wick and I, that chart probably represents my heart rate sometimes, but we've seen the GFC, we've seen the Asian debt crisis, we've seen European debt crisis, tech bubble. Number one, we've seen obviously COVID in recent times, and look, there's hope on the other side. And our funds recovered very well last year from the downturn in March, and we're very optimistic on the future for a lot of our stocks. Next slide, please. So here's really what we want to talk about is the clean and green theme. A year ago, this was a very lonely space. I've got to be honest, it was very difficult to get funding for a lot of projects. I mean, you can see that in the share prices of some of the lithium stocks. I mean, things like Pilbara Minerals and these things were on their knees 12 months ago and 18 months ago because the lithium price was very weak. graphite was under pressure, nickel, all these commodities were under pressure. So roll forward a year, and it's amazing how things change for the better, I think, because a lot of these projects should be getting good investor interest and getting banks involved in helping to fund them, not just equity providers. Basically, the thematic we've chosen to tackle this is obviously Australia's a mining country, and we've approached it from very much bottom up, i.e. what are the battery minerals that are required to go into this clean green theme. We focus on lithium, nickel, graphite, and copper. So this is the difficult part of this job is particularly in mining. You need to be very patient, as I said before, and we've got to ensure that these projects get up and running. I mean, if you look at a lot of the supply demand charts, which I've got up following this slide, they rely on this supply coming on, and that's very important to meet these demand profiles that we're seeing out of EV and renewables. Some of our key investments, I think a thematic that's taught me a lot in under COVID is travel, and the fact that geography when we're picking a stock is very important. So the thematic in a lot of our stocks is they're basically all based in Australia, and Australia is a good mining destination. So if I look at a company like Independence, which is quite a big stock and is our largest stock in our Future Leaders Fund, I can speak to Peter Bradford, the CEO. I've been to their Nova nickel mine in WA. I've been underground. I've seen their solar farm power solution. I've met their safety people. I know that it's a very well run operation, and I can go and see it. Now the WA borders are open. I can go and see it. I can kick the tires. Aeris Resources is copper and gold. The copper mine is in New South Wales. That's what I've learned in COVID. I mean, if last week we were offered a meeting with companies that are trying to mine lithium in the DRC. We can't possibly put our investors at risk, particularly in a geography which is very unlikely we're going to be able to travel, kick the tires, see what the mining methods are. So we pay a lot of attention to this, the geographic jurisdiction. What I want to also stress is don't backfill your process with a thematic of clean and green. Do the fundamental work. One thing about this job is you've got to do a lot of reading. There's a lot of information. That's why it's difficult to do all this in 10 minutes. But that's what we try and do. We visit sites. We speak to management, particularly in mining. How are you going to fund it? What's the grade? What's your environmental standards? How do you look after your people? ESG, I often say the S is social, but it's also safety. That's really important to us. And hence, we like to be able to kick the tires, go and see these operations. So what you won't see from us, at least in the next little while, is a lot of investing in offshore projects. Because of that, I think our investors expect that sort of due diligence, and that's how we're approaching it. So important, do your fundamental bottom-up work, value companies properly, and do the work. Just have a look at the next slide, please. Yeah. I thought this was pretty interesting. Basically, it's saying if Tesla is to get to 20 million cars, what sort of production growth do we need in the key minerals? And you can probably see at the top, graphite's quite a big one. Nickel's a reasonably big one. Lithium, much big one. Thing about lithium though, it is relatively abundant, but the projects have to be funded. So while it's abundant, it's not easy to process either. Neither is graphite. Nickel's quite a small market. There's been a lot of volatility in that market recently, which I think is very important. Where is the nickel coming from is a key question that we ask, and whether it's coming from jurisdictions that don't have strong mining codes, environmental standards, it's not going to be of interest to us. And I think what I learned in 2017, I did a trip to Germany, and a lot of the car companies we spoke to, VW, and this is a few years ago, they couldn't really tell me where their battery materials came from. And I was quite astounded by that. And roll forward 2 or 3 years, that's changing. And using the Philippines or New Caledonia or Indonesia as an example, it's probably not good enough coming from some of those destinations where they need to pick up their environmental and mining standards. So at the moment, we'll stick to Australia for our nickel. But next slide, please. This is basically a penetration slide from UBS. I thought it was very interesting that it's basically with the current materials, what sort of EV penetration can we get to? So obviously with Tesla talking about nickel, this is why there's not a lot of it certainly in grade. As you find with most materials globally, like copper and nickel, grades are falling, mines are getting deeper, and they're in difficult jurisdictions. So that's going to be very positive, we think, for commodity prices across the board. But also this responsible, I can't stress enough, responsible sourcing. I mean, you look at cobalt there. You all remember the furor around cobalt mining in the DRC. That's very important. Where do we get our cobalt exposure from? Independence, Nova in WA. We know where it's mined. We know who mines it. We know what the standards are safety-wise, and that's a big tick for us. Next slide, thanks. From the big guys themselves, BHP Nickel West, EV demand is going to drive nickel strongly. Hence, we're pretty well positioned in nickel stocks despite their volatility recently. Next slide. These are basically informational. This is where battery technology we think is going, and the green is nickel content in batteries. As we move to these more newer generation batteries, NMC 811, which means 80% will be 80% nickel. So hence we're pretty positive on the nickel market, as I said. Next slide. Thank you. You'll see a lot of these slides like lithium, graphite. Basically, demand is strong, and this includes current projects plus probable and possible. So supply needs to come on. So investors like us and our colleagues and competitors need to step up, as do banks. So it can't just be all equity funded. So next slide, thanks. This is basically, I started my investment career at the beginning of the commodity boom in 2002. That's where copper got to in that period when China was starting to grow strongly, and copper, there wasn't enough copper supply around, so the copper price did ramp. The green line is there where we're at the moment. So we think copper's got a long runway as well. Next slide, thanks. Once again, just another thematic here of supply not currently going to be able to meet demand in some of these commodities, and we think we can't not be positive on some of these metals. And that our commitment to responsible investing, and I think that's what we do. Responsible sourcing as well is key. So with that, that's all I've got to say today.
Thanks, Tim. Just a question: how important are ESG principles in your investment mandate? Do you see, some of your institutional clients demanding more of that from your investment mandate?
Yeah, definitely. I mean, look, we're not an ESG fund. Well, the fund was set up in the 90s, but we take it very seriously. I'd say at the moment, we're about 20% of the fund is in what we would call ESG or clean and green thematic stocks. We're not invested in casinos, and we do filter out a lot of these sort of industries that we don't find attractive anyway. So, but yes, it's certainly going to increase the thematic. There's no doubt about that.
And there's obviously a rush to supply these clean battery manufacturers for lithium, for example. How important is funding, the government to support these sort of industries, and or the role of banks? Are banks playing a role as well?
Yeah, banks certainly are. Well, they weren't 12 months ago, I can tell you, because they were a lot of these companies were relying on equity funding from people like us. But I think what's been really good, and it's probably understated, is like the federal government, as Simon will talk about soon with GenX. I mean, they've committed a big NAIF loan for GenX to build their project, North Australia Infrastructure Fund. So the federal government is putting their money where their mouth is. You know, I mean, I think a lot of people talk green. It's a matter of when the rubber hits the road, how much have you invested? And that's what we're proud of. And look, it's not easy. These are early stage, some of these companies, and they can be very volatile, and you can make it look stupid pretty quickly. But we strongly believe in this thematic, and it's our role to help it make it happen.
And as you know, there's some comments by Morrison on where is it here on a critical minerals sort of value to our industry. Do you see us actually manufacturing at some point? I know it all gets shipped overseas.
Yeah, well, you'll see that with Howard. I won't steal his thunder with Ecograph. Is that yeah, we're gonna bring a lot of these things onshore. I mean, not everyone knows that spherical or battery grade graphite basically is all manufactured in China, and it's a very dirty process using hydrofluoric acid. So Ecograph, that's why we like the company. A bit of a plug. It's going to be a clean and green graphite processing facility. One thing that does worry me is that there's going to be a lot of batteries around, and these guys also have a recycling play. So that's going to be very important too.